This is Empire Sports Alliance, Unfiltered. No fluff, no filters, just the real side of sports. We're talking athletes, coaches, agents, doctors, executives, the people behind the scenes who actually move the needle. From building careers to surviving the grind to winning off the field. This is where real conversations collide.
Welcome to Empire Sports Alliance Unfiltered. I'm Ronnie, I'm the wealth guy, my co-host Eric.
Hey, everyone.
And today we got a guest, we got Denzel Luna. Denzel, how are you?
Doing well. Excited to be here.
Excellent. Great to have you. So today we're going to talk about a very, very exciting topic, taxes. We just, finished the deadline here, the tax deadline, and I thought it would be timely to have, Denzel on and share a little bit in terms of like him working with athletes, what he does on the tax side, what his company's about, and how he got into it, and certainly share some scenarios, some things to do, what not to do, etc. So with that, if you don't mind, Denzel, could you give us a little bit of your background, what your company's up to, etc.?
Yeah, of course. Like Ronnie mentioned, my name is Denzel Luna. I'm a former college athlete, finished up playing at the University of Bridgeport, where I completed my bachelor's, but I also started my company. I started Nexa Tax. So we're a tax app. And essentially our mission is to help college athletes, simplify their tax process. So we act as a middleman from the moment the athlete will get paid to the moment they have to file their taxes. We're with them every step of the way. So tracking income, expenses, mileage, filing quarterly payments, all the nine. So giving them those features in one app is what our mission is. Currently, finishing up my CPA, my master's at Wake Forest, but we've been steadily growing with over 250 athletes on board on the app. We've been at several universities presenting, such as University of Nevada, Wake Forest, and really just pursuing this mission on, like I said, simplifying taxes for athletes.
Excellent. And can you kind of talk a little bit more about that transition from you being a college athlete and then going into the tax entrepreneurship, so to speak?
Yeah, of course. I think for me, kind of built the niche of taxes. I wanted to find something that I could always work with athletes. I mean, that's what taxes was for me. And so being a former athlete, kind of seeing, being in the locker rooms, knowing athletes, not per se my school, but guys I grew up with making NIL, starting to see, the lack of financial literacy, tax literacy that they have. And for me, it was a matter of, taking this niche and this technical knowledge that I have about taxes and, giving it to them in a way that they could actually understand. Right. And so that's where it kind of started and really gave me that background of understanding an athlete's mindset and trying to just make their lives easier.
I'm curious. I mean, you're a young guy and just starting this. So somehow you need to get your foot in the door. But I'm assuming, you're going up against agents now. And are you trying to go for the athlete and the athlete's like bringing you in, or are they saying, my agent takes care of it, talk to him, or, what are you finding yourself trying to do to get your foot in?
Yeah, I think it's a whole different landscape with NIL just because it's so new, right? So most of these college athletes aren't really represented. More in the pro level, they have representation, and it's starting to really grow in NIL. But for me, it was honestly a perfect timing of kind of going in really early, where most of these athletes were relying on more their parents more than anybody. And so for me, it was just kind of building the trust of, hey, being a former college athlete and then accompanying with having the technical knowledge of saying, hey, I have CPAs on our board, they're helping us, and kind of this technical knowledge of experience. So kind of bringing both. We've been able to bring a good number of athletes just with kind of building that trust. I think for them, they're constantly hearing everybody's pitches, especially with a market so new, everybody kind of wants to break in. And so it's really a matter of meeting the athlete where they are and trying to, understand what the position they're in.
So they upload like their expenses throughout the year?
Yeah.
It just kind of keeps track, and at the end it spits it out for them?
Yeah, essentially. So we have an AI scanner. So the athlete will either upload or take a picture, and then it'll do all the categorizing it, income and expenses. So as you're getting your 1099s, or some athletes, when the school is paying them directly, they'll get installment payments throughout the year. So we're constantly keeping track of them. And then it's already kind of calculating, hey, this is what your tax bill is going to look like year end. This is what your quarterly tax bill is going to look like. So kind of them keeping them, on point with their tax liability and kind of their deductions year round. And then, like you mentioned, once that year end comes, our first 1.0 is what's out in the App Store right now. So it'll spit out Excel in a Schedule C format for you can either upload in a tax filing software or give it to your CPA. It'll have all that information along with all the screenshots of your receipts as well.
Actually, I mean, not to be an ass, are you more of a bookkeeper for them
Yeah.
in a sense?
So right
You're being
now,
an ass, Eric.
yeah. No. So
I
right
didn't
now,
want to say it in a down way, but I mean,
no, definitely. No, we had to start, somewhere. And so that's kind of the approach we took. We started there. We do have educational features as well. So with videos and then as well our AI chatbot that we kind of a trained model to answer some questions for them as well. And then our innovations has been going into having the in-app tax filing. So currently what we're working on is accompanying that so that it just rolls straight through that the athlete can actually file their return in the app.
Do you feel like, and obviously we're going to talk about the pros as well, and I want to get back to what Eric brought up as a point in terms of collaboration with other, like, business subject matter experts that are working on behalf of those athletes and entertainers. Like, and again, I'm on the wealth side. I always try to work with the agent as well as, from a tax perspective or other, like, attorneys, etc. But do you feel like, again, NIL, kind of going back to that, has exposed kind of that massive gap? I feel that there exists between, like, again, the money that's being, thrown around in NIL and then the financial tax education that comes with it.
Yeah.
What do you see there?
I definitely think it has. Obviously, it's grown. So when I first started, it was around 2 years ago. So it was still pretty early. It came out in 2021. Schools are more pushing the education aspect. So now there's some schools will require athletes to take courses or do, they'll bring speakers in. But the main thing is still the school doesn't want the liability. I mean, there's a reason why these athletes are not employees, right? So they're
Yep.
not trying to get the liability of paying, the taxes of these athletes. So it really relies at the end of the day on the athlete. Most universities will kind of give some type of resources, which is great. But at the end of the day, most of these athletes don't understand that, hey, I'm getting a $10,000 1099. Not all of this money is mine. They just treat it as, hey, I just got $10,000. Now I'm going to spend it. And I think that's the biggest gap from obviously when you're a professional. Now, this is the money I'm making as a living. It's treated as obviously taken much more serious. When you're in college, you're already living in a dorm, everything's kind of paid for. So this is just additional money. And so kind of understanding where they're at, there is a big gap, considering that they don't have, they're coming fresh off of high school. A lot of them are more focused on their sport than their major. So there's a kind of a big gap of them understanding the type of income they're receiving and the knowledge as far as like taxes and things like that.
and then go on.
No, I think that's a huge gap, right? Again, NIL, just over the last, 4 or 5 years, you're getting huge paychecks. I just have a feeling, as you just mentioned, the schools in itself, they're not going to issue a W-2. You're not an employee. So they leave it up to the individual athlete. And you're talking about, again, folks that are very like embedded in the sport that they're playing, really on a very high level, right?
Yeah.
So they're not thinking about financial retirement, tax planning, etc. But, and again, hopefully they have an agent or hopefully they have, parents that are surrounding them with, giving that type of advice because it's extremely important, right?
Yeah.
What I'm saying is like, let's go with the example in terms of like, hey, you made $50,000, whatever. You sign a contract. We had somebody on from Upper Deck before, and you play your cards, right? You get $50K this year. You're embedded in playing whatever sport it is, right? You're focused on that. Well, the IRS doesn't really care about that the next day. If you forget to file that, right?
Yeah.
Let's go with that example. What do you see happen? I mean, I'm sure that happened a lot, no?
Yeah. So that's one of the critical things. I think a lot of athletes don't know that the IRS has up to 3 years to really audit. And then once they find something that they find plausible to audit, they can go from, the rest of the years beyond.
And just real quick, Denzel, on that end, I think it's really important for the audience to understand as well. They're not going to audit you year one. They normally wait to the very end of that, time frame, right? So all of a sudden you've been playing in college. Maybe you got drafted, maybe not, whatever, but you received a check there 2.5 years ago. Now they're coming after you. Is that correct?
Exactly. And now it's additional interest and penalties that they have to pay as well for, that time from, hey, I got a notice from 2023. I thought, I didn't have to worry about that. I filed 2024. And so that's something that it's still new, right? It's NIL is so new that this is still to be unfolded. I think in the near future, you're going to start to see a lot more cases and articles about this, that athletes are going to get audited just because there is that lack of knowledge. And athletes think, hey, IRS wasn't knocking on my door April 15th. That means I'm good. And that's not the case, frankly. And so I think that's the key thing that athletes, it's kind of not known for them, that I feel like they need to understand that, like you mentioned, it takes time for the IRS to process things. I mean, just now they came out with a lot of the numbers for 2023 returns, talking about, how many people filed, et cetera. So that just shows you the kind of delay that they're on. And so for athletes, it's not a time to be, hey, IRS didn't reach out, I can kind of rest and focus on the next year. This is something that they needs to constantly be aware about.
What percent of people do get audited?
I'm not entirely sure. What I do know is that most of the cases have been towards the higher income individuals. Most of it is in the top 50% of taxpayers, which is about 97% of the government's revenue. So what they see, and obviously when you think about how the IRS is expending their resources, they know that these college athletes are now making a lot of money. I mean, the market just hit 2.8 billion this year. So they're going to know this is a vulnerable market, and all athletes are already a vulnerable market because they know that athletes, are not managing these tax liabilities well. So I assume, like I mentioned, in the future, I think it's going to be a big percentage just because it's 1099 income, which is one, and then it's 18-year-olds that, have other things that they're worried about at that time.
How do you take into consideration? I know with the pro athletes, if they go to, well, I guess you're not doing the taxes, but I was going to say, if you play in a different state, you're paying taxes to that state. Are you guys keeping track of that and breaking it up, or because you're not filing, that's more of the accountant?
Yeah. So on our end, how we see it is, one of the things we're working on as an innovation is our calculator. So even though, like you said, we're not filing right now, when we calculate, we have to take that into account because every state tax rate is different. Also, if they're not in a state that has taxes. It's a little bit tricky right now because most of the income that these athletes are receiving, so it comes twofold. So they have the endorsements. When you think of the endorsements, it's, hey, they flew me out to New York, they pay me in New York, so okay, I'm paying that income in New York. But now when these universities are now paying them directly, say 100,000 for a men's basketball player, it's getting taxed in that state. The big thing now is there's a lot of legislation going around saying, hey, states, if I'm traveling for conference play, that rule still isn't really out for college athletes. It's really blurred lines right now, just because when it's a pro, it's kind of established as, hey, I'm going to this state to play against this team. I'm going to be there for 3 days, and they're W-2, they're employees. So it's a lot more clear cut. So that's something that's still to be determined, of how exactly these states are going to be taxing these athletes, just given that, this is a new type of industry going.
I think you're bringing up a great point because obviously, again, these individuals, like others, like if I'm sitting in Arizona or sitting in Southern California and, I'll just work here, right? I owe federal taxes, I owe state income taxes. And if you're in a state income, tax, state like California, these individuals, they travel. So not only do they have to consider the federal tax aspect, which is obvious, but also in terms of from state to state that they're playing in and generating revenue. I think there was a brief story here with the Super Bowl recently in terms of like some of these athletes, like, Sam Darnold, right? Now, I think he lives in Washington State now, but, you're coming down to California. Well, you owe income tax here as well because you're generating revenue. I think this gets so complex, right? And I think athletes are so embedded in their sport in terms of what they have to focus on. If they don't have a good team in place, and I know we're going to go into some of more of the mistakes that they're making, but this must be something that has to be considered early on in the process of making and generating that revenue.
Yeah, I agree. I think I've been speaking to several firms that are already they have their own practices working with professional athletes and college athletes. And you start to see, they'll tell you, hey, we'll bring on an athlete that just got drafted, and we find ourselves doing 2-3 years of amended returns because they didn't file their taxes the last 2-3 years from this NIL income because it was so new. And so that's a common thing for a lot of these firms, is just because, like you mentioned, it's so early. I think the schools are starting to get better at kind of telling them, hey, tax deadlines are coming up, but there's still this gap of meeting the athlete where they're at, because it's, there's one thing to just bring a CPA and then they tell you. And if you're an 18-year-old, what are you going to understand that the CPA is telling you compared to when you actually have to click file and it's getting sent to the IRS?
And I mean, Eric and I recently had, breakfast with, prominent agent on the baseball side of things. He was sharing with us, look, we're going out to the Dominican Republic, let's just say, and you have 13 or 14-year-olds, right? At one
Hmm.
point, they might get a paycheck as well. Now you're adding the international piece on that as well. And I'm just thinking, Southern California, I think you're talking not just college, I think even high school. Some of these, like high schools that we have, these people get recruited heavily. I think it starts at a very, very young age. But a follow-up question to what you were mentioning, you're mentioning 1099 income versus kind of W-2 income. Would you mind explaining to the audience the quick difference? And then as a follow-up to that, if the 1099, in terms of how to receive that income, in terms of what to consider, maybe, incorporating it.
Yeah. Yeah. 1099 income is what's known as self-employment income. So essentially how the tax system breaks down income taxes in two ways. So you have your W-2 and then your 1099. W-2 is your everyday 9 to 5 job where you're an employee. So say if I had a part-time job at McDonald's, McDonald's would be paying me, and every paycheck, they're going to be taking out some of my paycheck and withholding my tax. That is the most common. Pretty much 90% of what US Americans are filing is W-2 income. But then there's that 1099 aspect, which is a self-employment, a contractor. And essentially what that's doing is saying most of these athletes will get endorsement deals. For example, have had athletes that have gotten endorsements with companies like Dunkin' Donuts. So let's say Dunkin' Donuts says, hey, we're going to pay you $10,000, do 3 social media posts endorsing Dunkin' Donuts. I'm not an employee to Dunkin' Donuts. So Dunkin' Donuts is going to pay me $10,000 cash. In the form of 1099, and they're going to go about their way and they have no liability that because I'm not an employee to them. And so that's what 1099 income is. The big difference comes that nobody is withholding any tax. And so the main pitfall that these athletes are going into is that they receive these $10,000 and think, hey, I just got $10,000. Now I can spend $10,000. But the real reality is that that is not entirely theirs. Nobody has withheld any tax. Federal, state, like we were talking about, and even in some cases, city, when you're in somewhere like New York City. And so that's where most of the pitfalls have come. What we've seen is that these athletes don't understand that nobody is withholding anything and I'm just getting paid. But at the end of the year, you're going to receive what's called the 1099. And like you receive it, the government will receive it as well. And so even if you don't do any action on your part, the IRS will as well. And so it goes to your point of what you were talking about is these 1099s come in different forms. So obviously it can get emailed to you. Obviously with now technology, sometimes this just gets sent to your phone and you don't even think about it. And so oftentimes we'll have athletes that say, hey, I didn't receive a 1099, but you're still going to be held liable because most of the times these companies are sending it to the government and it's on you to kind of reach out to say, hey, I didn't receive it. Oftentimes it might just be in your junk email. And so now it's not as clear cut as it was before where you kind of would just receive it in the mail and say, hey, I have my 1099s, I have my W-2s. Oftentimes we have these athletes a lot now, looking for them, making sure that they're kind of, finding it and doing their research to getting the tax forms that they've been assigned.
What is your advice in terms of, let's just say again, $100,000? I think you're bringing up a good point, right? Oh, I'll go buy a car, I'll buy something else, etc. I think you brought up a very important point. When you get the 100,000 in your pocket, it's not not all the 100,000s are yours. You still owe
Exactly.
tax on that. Again, if that's now or if that's later, they will come for you. So, in terms of receiving, what advice would you give in regards to receiving that, 1099 money? What
Yeah,
I
yeah.
mean by that is it good me as an individual just opening an account in a personal name, or what other strategies might be of
So
benefit?
that you bring up a good point. There's two ways. I guess from structure standpoint, when you think about taxes, it all flows through a Schedule C. For example, if I have an LLC and then another person doesn't have an LLC and I'm receiving this 1099, I'm still filing my taxes the same way. So the IRS sees LLCs as a disregarded entity, so it goes through your personal return. When you think about LLC, it's more protection, obviously on the legal side and structure. So these athletes, instead of giving your social security to all these different companies, it's now an EIN, and it's more organized and saying, hey, these expenses go to this income, and this is all under my LLC. But at the end of the day, it's still filed the same way. So a big misconception is I'm going to get more tax deductions if I have an LLC, when in reality, it's the same thing. It's just more organized and gives you less legal liability if, hey, I was paid for an appearance, I don't show up, they can't sue me and my personal assets. When you
So
think
from a
about,
liability perspective, that's a huge factor as well.
yes, much more legal than people think. Obviously, when you get down into more tax planning, which is, you're making significantly higher income and 300,000, and you kind of go into making an S corp election where you're not paying as much self-employment tax. That gets more intricate and that becomes more tax planning. But when it's simply like an LLC, a big misconception is, hey, I can't take these deductions unless I have one. But it's purely more for legal and protection rather than a tax advantage. And to your point, like I was going to say too, as far as withholding, I think is a good advice. I'd say too. Generally, people will tell athletes 25 to 30% of what you're receiving should be withheld for taxes.
Rule of
If you
thumb, you say?
Yeah, that's what the rule of thumb would be. If there are athletes that really do want to get more particular of, hey, I want to, kind of withhold, so I'm not going to end up paying penalties. There is what's called the safe harbor, which is essentially you could either pay 90% of what you expect to owe this year. If you have a good idea of, hey, I know I'm going to get for sure 100,000, you can pay taxes on that $90,000, or you can do 100% of the prior year. And then there's a phase out that if you make over 150,000, it's 110%. But with this, you kind of have that comfort of knowing, hey, I'm not going to be charged any penalty for mispaying any quarterly payments, which is a big thing, especially with these athletes making a large amount of money, that make sure you're not going to pay any interest or penalties.
Eric, I think you had a comment.
Well, I was just going to say, are you saying take a third out and put it in a savings account and keep it there? But you kind of just said that.
Yeah. And there's always ways you can pay these quarterly payments. It's if you consider yourself, hey, even if I set this aside in the savings, I still have this temptation of spending it. You can automatically pay it up front to the IRS. They're not going to say no to, taking money beforehand either.
Yep.
Looking at, getting, let's just say again, I'm receiving 100,000, get a 1099. I incorporate I'm an LLC, setting up an LLC. Can you speak a little bit? I think sometimes that gets forgotten as well from athletes in terms of the opportunities they now have to also, deduct certain expenses, right? Be that nutrition, travel, etc., because it opens up certain opportunities as they are self-employed and receive self-employed income, right? Could you elaborate on that, please?
Yeah. So most of the deductions that you can take regardless, honestly. But when you're an LLC and you start to open things in the business, it does present some opportunities. Like when you think about getting a cell phone or getting, let's say if you rent out an office space, as well as even to Wi-Fi, a section of your Wi-Fi if it's dedicated. So there's a lot of things that can go under of what you want to write off. I'd say the biggest rule of thumb for these athletes is understanding it's what is ordinary or necessary related to the business income. Oftentimes what these athletes start to think, and if you get caught up in social media of seeing all these people writing off these things, is that it's not all deductible. Oftentimes, a lot of things is what's being advertised as deductible is more personal items that the IRS, if you go and look at these tax court cases, case by case, they're not ruling these as deductible. Sometimes I'll hear athletes say, hey, I just bought a big chain. I can write this off because it's my image. And to the IRS's eyes, no, that's personal. You may use it for a commercial, but at the end of the day, you're going to use it every other day of the year, right? And so there's a big distinction, and it kind of gets deeper. But I'd say the biggest rule of thumb is when you're an athlete and if you open an LLC, it's what is ordinary and necessary that for me to receive this income, I need to spend money on X, Y, and Z.
What are some of specific examples? Again, would it be nutrition? Would it be travel, trainers,
Yeah.
individuals like a chiropractor like Eric?
Yeah, so it depends. When you want to think of, let's go on the side of endorsement first. So I'd say content creation tools. If my job was to post on social media, so if I got a camera, if I got a ring light, if I got a subscription to edit the videos, if I had to get a premium for Instagram, right? That would all be deductible, as well as taking things in consideration if I have to travel for a photo shoot or an appearance, that mileage, kind of being able to write off, if I'm now taking a portion of my car, if I'm doing a lot of traveling, now I'm doing appearances every weekend. Now you're able to kind of write off things like, your car insurance, your car bill. But then on the recovery side, for the pros, it's been more common, obviously, known as recovery equipment, just because there's a big distinction. As a college athlete, it's a blurred line, honestly, just because it still hasn't been really defined, because what's being sold is the athlete's image and likeness. And so I'm assuming there's going to be a lot of court cases that, accountants like me will be looking at as saying, okay, they took this position. They've been writing off, not just chiropractic, but everything with, nutrition and everything like that. There has been athletes take that position. It is, like I said, it's more common. Professional athletes definitely can take those things because their image, right? It's their performance. What we've seen with college athletes is it's kind of hasn't been clear yet, just because it's more their name that they've been looking at, their kind of social media status, rather than the actual athlete getting paid for his services as far as playing. So I'd say when it comes to nutrition, it's still kind of a blurred line as far as where it is right now.
Okay. Well, in terms of like, maybe let's go into a few of like these examples, real life examples that you have experienced. Not just athletes, but also like this is going to be a follow up question as well in terms of like entertainers and influencers. You kind of touched on that a little bit, but I mean, there's a lot of folks that are now like again, social media is their main revenue stream, etc. So, but maybe you have a couple of examples you could in your practice that you could share with the audience.
Yeah. One of the main ones I'd say is obviously, especially college athletes, when you think about, hey, either tracking expenses or receipts, it seems just like an extra task on their plate that they don't think is really that necessary. But when we kind of put the numbers into place, we had an athlete that had over $20,000 in expenses given travel, that he had to go to an appearance. He was even buying cleats for practice because he didn't like the ones he was using. He was buying extra cleats, and all these things add up. And he was making over $80,000. So if you just take it from a plain equation, I'm going from paying taxes on $80,000, and now that I'm able to write these deductions off that were ordinary and necessary that I needed to receive this compensation, now I'm paying taxes on $60,000. You're saving almost $1,000, $1,500 in just keeping your receipts on money you already spent, right? And so that's kind of one way we were able to kind of put it into action and show athletes like, hey, this is a real life example of how he was able to save over $1,000 tax liability, just given that he was able to have his receipts be organized and know that at the end of the year he was able to write it off. And so that's what we try to paint to our athletes, so to kind of motivate them like, hey, this is not just an extra task, but this is also saving you money. And to your point, as entertainers and influencers,
Yes.
what we've mostly seen is it's been kind of a lot of the same. Obviously, most of their income is going to be 1099, especially these influencers. One big thing I want to hit on is that these influencers oftentimes are receiving products, right? And so you might not think like this is compensation. Hey, I just got these 5 pairs of shoes. They want me to do a social media post. Influencers and sometimes athletes will think, hey, this isn't taxable because it's not cash. The IRS views that otherwise. Oftentimes, we've seen brands dish out 1099s of the fair market value of these products that they gave you. And so that's one big thing I'd say for influencers, is to be cognizant of the value of what you're receiving, even if it's a product and not cash, because sometimes that's also taxable as well.
Wait a sec. So I've had companies send me product to test out on athletes and all that stuff. Now, I've never received a 1099 for it, but you're saying I could technically?
Yeah, it's very possible. Most of what we've seen is if say, hey, I'm endorsing Nike will probably pay you. But if they say, hey, we're just going to give you these pairs of shoes or smaller brand, and it goes over that limit. And the big one too is for athletes is cars, right? They'll get these car deals.
Ferrari sent me a car to test out and take the
Yeah. Exactly. No, yeah. And athletes will think, hey, I just got this deal. Because it's not cash, it's not taxable, and that couldn't be further from the truth. Most of the time, it's obviously for an endorsement perspective. So if they said, hey, we want you to post this multiple times, and they're giving you a lot of value, they're going to, try to write it off because it helps their tax bill as well. It's very possible that you can get a 1099 if it's, up to that value.
Now, you keep bringing up an LLC. I own my own business, obviously. I'm an S Corp. Are most athletes more LLC than a C or S Corp, though?
Yeah. LLCs has now taken as honestly the most popular entity, just because C Corp, there's a lot of obviously regulation, and there's a lot of things you have to kind of keep paying and as far as, franchise costs, things like that. So the most simple thing for athletes to do is LLC, and it gives them the same protection as what a C Corp would. The only time you'll see that sort of differentiation from an S Corp to a C Corp is, like I mentioned, and this is mostly when a tax professional would recommend that situation. But if you're making north of 300,000 plus, so a lot of these top 1% athletes that are making significant amounts of money, they would be filing an S corp just to kind of limit that self-employment tax that they're paying. But it's more definitely a case by case. Most of the athletes, if they're not making anywhere near that amount, have an LLC just because it's the most simple thing and also provides what it needs, that protection.
Got it.
I mean, you're basically saying it depends is the answer, right? So it depends on the
Yeah.
situation, from an amount of money, what it is, et cetera. Again, always kind of like,
It's
consult with
always
your
tax.
tax
It always
professional.
depends.
Yeah,
Yeah, yeah,
yeah, yeah, yeah. It's the same thing like in the legal aspect of things as well. So it's same
yeah.
thing from a wealth perspective
Yeah.
also. But in terms of just kind of summarizing from a mindset and education perspective, why do you feel like athletes don't take taxes that serious? I mean, I have an idea early on, right? Why is that? What do you see as a common, just they fall in a trap?
Yeah, I think what we kind of said earlier, it's not like April 15th, they're giving you the notice right there and then you kind of know. Oftentimes you're not finding out till years later. And so I think that there's no sense of urgency for the athlete to do it, right? If it's not the team and the coach kind of saying, hey guys, today we're filing taxes and everybody's going to do it at the same time, oftentimes these athletes aren't going to do it unless they have, like you said, third party agent, a parent kind of telling them, hey, we have to do this. Like I mentioned, it's growing. A lot of knowledge is getting there, at least the awareness part. But I think it comes down to the basic essence of I'm an 18-year-old. I just finished high school. Now I'm going to get paid this amount of money. All I'm worried about is how much money is in my account. I'm not worried about, hey, I have to now pay taxes. I have to worry about things like write-offs. And so they kind of view it as something, their parents should be doing or somebody else should be handling. And that's, I think, a big pitfall because at the end of the day, the liability, that 1099 says your name, right? And so the liability is falling on you. And so I think that's one of the biggest things I've seen from the athletes we work with.
Well, how much is ignorance also can make that much they're not going to know if I did it or not.
Exactly.
Well, I think that to that point, Eric, and I know they're not going to come after everybody or can't audit everybody. But if you have kind of a public image, be cautious because you're out there, right? So you're going to be an easier target, not necessarily from a revenue perspective, but just you're out there, right? So
Exactly.
in my practice, so I work with business owners, and I work the other half is really athletes and entertainers, individuals. And I always tell them in terms of like, the reason why I cover these two segments is athletes, entertainers are business owners. They are the business, but often enough, because early age, life experience, et cetera, don't necessarily realize that. So how would you shift someone's thinking from like, hey, I'm an athlete and I'm playing hockey, whatnot, to thinking like a business, which they are?
Yeah, I think when you kind of, like you mentioned, when you start to look at what am I getting paid for, it's for my services, right? If you kind of take yourself out of the equation, there's no way you would be getting the compensation you would get. And so I think already you have to kind of understand like, hey, if I don't perform well, if I don't, kind of it's up my status that is, enabling me to receive these endorsements. I think that's when I think the athlete can kind of hit on, well, I am the business, right? If they're not paying, my team for me to kind of, play good or to endorse this brand. They're paying me, right? Because of my image. And so that's what we can, it's a big thing about awareness, showing the athletes like, hey, it's you guys that are the business. And so ultimately it's kind of you guys of taking charge on how can I best maximize, obviously from a tax perspective, from your case, a wealth perspective, and even from a recovery perspective, because at the end of the day, if I get hurt, how many endorsements am I going to get and how many, income streams am I going to cut off with an injury, right? And so I think just kind of painting that picture to the athlete is very important. But then also taking the perspective of, hey, understanding, it's me who owes this income right now. It's not, I can hide behind a business. I can hide behind a team. They're paying me. And so it's the athlete understanding that the liability is now that they're the business. It's on them.
Yeah.
At what income level? Again, like, you kind of answered it previously, I guess. It's not necessarily the income, but at what level do you feel like an athlete should really start thinking about building a real, like, financial team around them, right? Which I consider, like, again, a CPA, a wealth advisor, obviously you have an agent, but probably need from a legal perspective, how you receive it, how you're structuring. You might even think about individually setting up a trust already. And how when is there a particular income level, or it's just like, hey, now you're out and about, you're getting some money, let's do it now. I mean, obviously you guys offer an easy way in terms of from a tax perspective to
Yeah.
start with that. What would be that advice coming from you?
Yeah, for sure. I like you mentioned, I think we're definitely that starting point of athletes getting started.
Yeah.
We even recommend, and that's what most of our kind of conversations are with other firms is how do we kind of hand them off to getting this more personalized help? And I think it's twofold. I think there's obviously an income threshold, which I'd say anything north of, high 5 to 6 figures, it's a big thing. I mean, you want to start building a team. But the other thing I'd say is looking at, what do the next 3 to 5 years look for you, right? If I'm a freshman, hotshot freshman coming in, and maybe I'm only getting 80,000 this year, but I know I'm getting 200,000 next year. I have a good shot at getting to the league, right? You have to understand kind of the potential as well, given that you want to be set up for success before it happens, right? Oftentimes the athletes won't understand until after it happens, after they've gotten all this money, they haven't filed a tax return the previous year, and then now is when they want to get, a team. And a lot of these pitfalls and even, penalties and interest that they'd be paying can be mitigated if you kind of do it up front. And so it's not just, like I said, that income. It's also, hey, if I'm getting paid out of high school right now, if you're receiving NIL out of high school, you're probably a top 1% athlete. So you're definitely going to get a lot more once you get into university. So that's when you want to kind of already start thinking of kind of getting those, building that team of an agent, financial advisor, a CPA. So from that perspective.
So plan early, play often.
Yeah.
I was going to say, what are some horror stories that you've seen? What's the biggest F up you've seen someone do?
I mean, I've seen, and so we have one of our interns, he's the kicker at Wake Forest. And so he's been able to kind of bring a lot of insight. And so a lot of his buddies are playing football, not just here at Wake, but a lot of other schools. And so he had a buddy, he did not file his taxes for the last 3 years, right? And so you might think that's big, but then if you ask the amount, he was making over 200,000 every year, right? And so now you're looking at, I can tell them, hey, Nexa's not going to do anything for you. You're going to need some bigger help at this point, right? But there's a lot of cases like that, and kind of telling them like, hey, it's not just going to be interest and penalties, for the rest of your life. It's just also legal action and even jail action if you don't do anything, right? And so that's the kind of thing that I was telling him. I didn't know him; it was kind of a friend of a friend, but he was telling me that story, and I was like, I mean, it happens more often than you think.
So how much is that guy going to owe and stuff?
It gets tricky. So there's two types of penalties when it comes to the IRS. So there's failure to file and then failure to pay. So sometimes if you even just file your taxes and then you don't pay what you owe, the penalty is less because the government's saying, hey, at least you filed. We know how much you make. It's now on you to kind of pay. It's mostly, so I think the failure, don't quote me on this, but I think the failure to file is 5% every month up to 25%. So that'd be every year. So he's paying what he owes in taxes plus 25% for every year. So yeah, he's looking, it'll be a large tax bill for sure.
Plus, I think to your point, what people don't forget, it's very costly. Now you're involved in litigation, right? You have to, hire an attorney, a tax attorney, et cetera, to litigate with the IRS, which they have unlimited funds, right? So again, you're way better off having some boring conversations at a very young age with a couple of people that you trust that you could bring to the table. Might be boring to a certain extent. It's going to be a hell of a lot cheaper in the end than having to go through this kind of stuff.
I agree. I think another one I just remembered of. I was talking to somebody. He was playing a college basketball player. It was a guy off the bench that was making around $80,000, so he wasn't playing that much. But come tax time, he spent the entire money, and he went to the coaching staff and kind of told them like, hey, I have to pay taxes on this, and I don't have anything left because he wants to go buy a car. So that's a big one. So oftentimes it's like we said. So maybe this guy, he's going to realize he owes a lot, but now I've already spent all the money, right? And so now I'm going to have to sell my car, sell this jewelry I just bought, but at some point he's going to have to find the money to, pay that liability.
Yeah.
Well, awesome. I know, Eric, you're thinking about all the stuff. You're excited about your taxes, probably filed an extension, all the things you can do, or you effed up already.
No,
But
actually, this year I did not do an extension.
well, I don't know if that's a good thing, but cool. No, I mean, and so any last piece of advice for, again, any of the athletes, entertainers out there? Obviously, you guys have a great platform in terms to utilize, but any last piece of advice before we wrap it up?
Yeah, for sure. I think the main thing is to both of them. I'd say the first one, if you're listening to this and you say, hey, I didn't pay my taxes from last year, the year before, and you're kind of panicking, I'd say obviously it's okay, right? You can still file. A lot of firms are doing amended. And so kind of, I'd say the biggest thing is filing that return. Like I mentioned, the penalty goes significantly down from when you file to when you pay. And also the IRS has payment plans where you can pay monthly. It doesn't have to be all up front. Just to kind of put it at rest. I know we had some athletes that once I told them, they get super scared, but there is ways to obviously kind of fix these, so that's the first one. And then the other thing is, I'd say getting started early. Like you mentioned, you're now at the high school level. I think for us, what we try to do at Nexa is trying to simplify this process, at least early on, up until you're making, six figures in kind of amounts that you now need a team. But the main thing is getting started early, getting familiar with these terms of what is a 1099, nobody's withholding, concepts like that, because it's definitely going to be useful.
Awesome. No, that makes sense. Again, it might not be the most exciting topic out of all of them. We just had a recent conversation with a lawyer in regards to intellectual property and how to protect that. But it's definitely needed. You could
Yeah.
really set yourself up for success at a very young age because again, maybe you're not going to play pro, but maybe you do everything the right way. You save the taxes, you save the money, you're protected from a liability standpoint, and now you're off and doing your business, whatever that is. If that's nutrition, training, or any online type of services. I think, Denzel, really insightful. Certainly appreciate it. And, I'm sure we'll do another segment.
No, of course. I appreciate it. Thank you guys for having me.
Thank you.
Absolutely.